Hi guys, just gone midday here in London. A quick look over the markets. The S&P, as you can see on the screen, they're currently on its 1, 2, 3, 4, 5th, 6th down day at the moment. It looks like, which hasn't done 7 since December 2018, of course, where we ended up bottoming out around Boxing Day. So stock's still under a bit of pressure. Goldman and Citi saying there's more downside to come. In their opinion, it's going to be a headline-driven market. The technicals, of course, will help things out, but it's certainly, a trend line like this, something to keep an eye on around 30.50. You've got a lot of potential support there. I know we've got this longer-term trend that we were talking about yesterday, which is a pretty good guide, I would say, to this market. If we can get back above there into the close of the week, then we might get that sort of relief rally. If we come down and test this trend line here, which is from the lows of August last year, as we know, this is the low after China devalued their currency, we could see further push to the downside. It could really open the door up to 3,000 there on the S&P. So important zone, important end to the week. Stocks just on the back foot over the last sort of couple of hours or so after finding a bit of resistance up at the top. So worthwhile keeping an eye on that. We're just pushing below this low now. We're coming into a bit of a range between 76 and 70. You feel, again, if these technical levels do go and there's no new headlines, well, a break of those lows and it could get relatively ugly again. However, it's in that quieter period, so it's not a guarantee at all. One other market which is certainly very interesting to look at longer term is oil, having yesterday broken through its low of the year, and also a trend line that goes back to the lows that we had in 2016 on that double bottom. We've broken through there, and really I wouldn't be bullish now unless we can get back above $50, and at the moment you can see we're almost $3 below that there now as well. Key level coming up around $47 handle. This for me is a bit of a last leg of defence before people start talking about $45. What OPEC would do around there remains to be seen, and there is obviously quite a good area of support at that, and to be honest, I think by the time we get there it could be an opportunity to look for some longs, but maybe it's better to be late than early and waiting for $50. This trend line to break to the upside could be the play there. Having a look over at gold, which today is still relatively range bound. You could argue it's just pushing up to that upside. I think if stocks go and we break lower, then I'd be keeping a watch on that sort of 1660, a lot of resistance around there. For me, it's a buy above that to target 1670, but it just hasn't really been at the moment over the last 3 days buying into the stocks coming lower, so just bear that in mind. But technically, push above there, not a bad little opportunity. Euro had some strength this morning, you can see pushing on. The pound had some weakness, but I do quite like the idea that if we can get back above the low of Monday and yesterday's low, that this market could start to see a better recovery towards the highs of the day and even yesterday's morning low. That's a potential opportunity here. At the moment, it's below those levels and under some pressure. Quick look over at the calendar. We've had a quiet data calendar really this morning. As we go into the afternoon, we've got the second estimate GDP from the States, which will be worth keeping an eye on, and some PCE numbers and initial jobless claims before pending sales come out at 3 p.m. UK time as well. Overnight, bit of data out of Japan, but really this market is going to be driven by headlines regarding the virus, developments, new cases, that kind of thing. As usual, any questions, let me know, but I hope you will have a good rest of the day.